In this video, I'm going to be teaching you how to make your top-down analysis in the simplest way. Hey guys, if you are new here, this is Synthetic Goddess, and on this channel, I teach you strategies to trade synthetic indices, even if you are a beginner. If this sounds like something you are interested in, do not forget to hit the subscribe button. So basically, what is top-down analysis? Top-down analysis in trading is just a multi-time frame approach. That is, using different time frame to approach and understand your overall trend before refining your entries on lower time frame. This is just about you using different time frames to do your analysis, just for you to get the exact and precise entries good for your strategy. So we have different types of time frame. We have different types of time frame, and I'm going to be categorizing them into three parts. We have the higher time frame, we have the mid time frame, and we have the lower time frame. Higher time frame, mid time frame, and lower time frame. Now, there are three things that you would do when it comes to top-down analysis. There are basically three things you need to do. First, you want to get your directional bias. You want to get the exact area where market is going to. The second thing you want to do is refinement. You want to refine those areas that you want to refine your directional bias. You want to refine your key zones. You want to do all of that on the mid time frame. Your directional bias can be gotten on higher time frame, while your refinement is for mid time frame, and your entry and confirmation is for lower time frame. And I am going to be categorizing this time frame. For higher time frame, we have the monthly, we have the weekly, we have the daily time frame. Those are the time frame that we use for higher time frame. And when we talk about the mid time frame, we are talking about H4, all this hourly time frame. H4, H1, 2 hours. Sometimes you're going to see 4 hours and all of that. Sorry, you're going to see 8 hours. All of these are mid time frame. And when we talk about lower time frame, we are talking about the minutes time frame, the 15 minutes, the 30 minutes, the 5 minutes. This is what we call the lower time frame. So all you want to do is get your directional bias on the higher time frame. So that is what we're going to be doing now. This is volatility 25, and this is what I am going to be using. So if I want to know the exact directional bias of my trade now, the first thing I just want to do is to get my last break of structure. Where do we have our last break of structure? That's the first thing I want to ask myself when it comes to me identifying my directional bias. Of course, I want to see where exactly market is coming from and where exactly market is going to. So I'm going to mark out my last break of structure. I would first identify my last break of structure on 24 hours time frame. If you can use your weekly time frame, if you can use your monthly time frame, it's really amazing. And also, no matter the kind of trader you have, it is very essential that you get the directional bias on higher time frame, so that your mid time frame can be used to get your zones and all of that. And also, you're going to be able to fit it in based on the kind of trader that you have. So I'm getting my last break of structure on 24 hours time frame. So this is my last break of structure on the 24 hours time frame. And it is very essential for you to also get key zones on higher time frame. You need to get your key zones on higher time frame so that you can refine it to your mid time frame. So this is my last break of structure, my overall break of structure. This is where we have the last break of structure. And where is my first key zone? I really want to know the low that I am not expecting market to take. I am not expecting market to break that low, right? This is higher high and this is higher low. This is where we had the last higher low. Automatically, this is the low I am not expecting market to break. Why? I am not expecting market to break it in the sense that since we are in an uptrend, I don't want market to come back to take this if we are still going to continue the uptrend. So if market takes out this low, it automatically means that we have a change of direction. That is why I marked it out that I am not expecting market to break it. So that is the low I am not expecting market to take. Meaning that every other low here, market can take it, or market can choose to take it or react from there. I am less concerned about all of those areas. But my major concern, my major part is that I am not expecting it to break my higher low, which is this low. And if it breaks it, then I have a change of direction. That is my key zone. My second key zone is, where do we have other block, supply or demand candle on the higher time frame, since we had our last break of structure to the upside there. Now this is going to help you also in the refinements. You need to mark out the major supply and demand. You need to mark out the major order blocks, the major liquidity also on higher time frame. So since this is my last break of structure to the upside, based on my liquidity, right? Based on the liquidity concepts that I use, this low is an inducement for me. It is a projected inducement. The reason I call it a projected inducement is that you cannot be so sure of what market would use as an inducement until market uses it. There's always a validation for inducement, and the validation is always break or structure. So if I don't have validation, it is still a projected inducement for me, because market can still do anything at any time. It might use it, it might not use it. So I am going to call this my projected inducement, of which I am also marking out on the higher time frame. Meaning that since this is my projected inducement, I am expecting market to come back to take it. That is what I am saying, right? I am expecting market to come back to take it, since it is a projected inducement for me based on my strategy. Also, where is the likely area, or where is the likely zone, other block, sponsored candle, or whatever you might want to call it, based on your strategy? What I am talking about is point of interest. Where exactly is the point of interest that you think market would come back to? You also mark that out on the higher time frame. And the next thing you just do is, let me mark my area of point of interest. I'm marking this out as point of interest, right? So the next thing I am just going to do is go to my mid time frame. I'll choose a particular time frame I want to use for my mid time frame. Now, this is also based on the kind of trader that you are. As an intraday trader, I use the 4 hours time frame. Sometimes I use my 8 hours time frame, and sometimes I use the 2 hours time frame. It depends on the market or the time frame that is displaying the exact thing according to my strategy. It depends on the exact time frame displaying that. But I am going to advise you that if you are a beginner, stick to a particular time frame. So you can use the 24 hours as your higher time frame, and you will use the 4 hours as your mid time frame, and you just use 15 minutes as confirmation. You can just stick to that. If you cannot shuffle in between time frame, I'm not going to advise you to just go all over different time frame. So for this video, I'm going to be using 4 hours time frame, because that's the most common time frame for all type of trader, whether you are a scalper, an intraday, or a swing trader. That is the most common time frame for all traders. Whatever type of trader that you are, that's the best time frame that you can use as a mid time frame. So you can see this low I marked out as inducement as hidden double bottom. This is double bottom for me. This is double bottom for me. So it is a valid area of liquidity for me. So there are two things that can happen here. Since I already marked this place out as my area of interest, I'll just refine where exactly am I expecting market to come back to. So the first thing I want to look at here is that this PO high that I marked out, is it a major? Is it a major for me based on my strategy? Is it really a good area? You can see that we had this low manipulated to the left hand side, so it is making this particular point of interest a strong place for me. I would have marked out this area if it was a strong place based on the fact that we had fair value gap there. And the funny thing is that market can still use it. Why? Because of that impulse and momentum. We had a lot of distance. Let's put it that way. We had a lot of distance. So if you are a beginner, you are not confused about what impulse and momentum is. You can see that we had straight move to the upside, like we had long move to the upside. That is what we call distance and momentum. So this is a long move to the upside. So if we have that long move to the upside, it is really, really possible for market to just see a valid fair value gap and use the place for continuation. It is still valid. So I am just going to mark this out also. I am going to mark out my fair value gap. I'll mark out areas of fair value gap here on my mid time frame. Is it possible for market to come back and use this PO high? Yes, it is possible. So I am refining my PO high to this high, from this high to this low. This is my major POI. This is where I am expecting that market would come back to. You can see that I've been able to refine that. And I marked out the liquidity sweep, which is market manipulating a previous low, also on this mid time frame. All you want to do on mid time frame is just for refinement. Mark out your fair value gap. Is it closer to where you marked out your point of interest? Where exactly do you want your point of interest to start? And also you can see that on this time frame, I was able to identify this hidden double bottom, and I was able to mark that out. So I've marked out my PO high. The next thing I am just going to be waiting for is my lower time frame. All right, I'm going to go to my lower time frame to get a confirmation. Your lower time frame is where you are going to get your confirmation and entry. So as an intraday trader, I'm going to advise that you make do with 30 minutes. And as a scalper, I'm going to advise that you make do with 5 minutes as a scalper. Also, as a swing trader, you can get possible entry areas on 30 minutes, which is your lower time frame. But if you hold trade for that long, you can still use the 1 hour time frame. But personally, I love to use the 30 minutes and the 15 minutes time frame to confirm change of character. Yes, that's the word. I want to use it to confirm change of character. I want to use it to confirm liquidity grab before entry. That's what I want to do on the lower time frame. It is not complicated. That is just what I want to do on lower time frame. Any other thing on lower time frame, I'm not analyzing my structure on lower time frame. I'm not analyzing my liquidity or PO high on lower time frame. All I want to do on lower time frame is to get my entry, and that is it, because there is a lot of noise on this lower time frame. If you check the 15-minute time frame, there is a lot of noise there. Market just, moves anyhow it wants on lower time frame. But if you use the 30 minutes or 15 minutes for confirmation, it is perfect. It is really okay for you to use that for confirmation. So all I'm just going to wait for is the pattern of my confirmation. I have a particular pattern for my own confirmation, and when market displays it, I know that it is time for me to buy. So it automatically means that if I am waiting for this place, if this is my key point of interest, I am waiting for market to just come back and give me an entry, possibly a change of character inside that PO high, and I am going to get my entry, and that is just it for me. I will use it to get my entry. I will enter there, I will place my stop loss and place my take profit, and that is just it. You can see how simple it is. You don't have to get yourself complicated. You don't have to complicate things for yourself. All you need is, which higher time frame are you looking at? What particular higher time frame are you looking at? What you want to get on the higher time frame is directional bias. What mid time frame are you looking at? All you want to do there is to refine. And what lower time frame are you looking at? All you want to do there is to get your entry confirmation, and that is all you need for your top down analysis. I hope this was helpful. Leave a comment in the comment section if you have a question and if you found this helpful. I'm going to see you guys in the next video. Have an amazing week ahead.